Welcome to the Strategy with Jason podcast. Tune in for everything you need to know to stay in the know regarding the automotive industry. Here's your host, Jason Harris.
Hey, what's going on, Podcast Nation? It's Jason Harris here, and thank you for joining me another episode of Strategy with Jason. Today, I am live driving with Nate and Brett from eDirector. What's going on, guys? How you doing?
Good, man. How are you?
Good. It's my first time in Philly.
Us as well.
Okay, cool. Then we're going to go get lost and see what beautiful scenic things Philly has. I don't know.
That's where the Phillies play right there.
Is that where they is it?
Citizen Bank
there's
Park
the stadium.
And Lincoln Financial Field. So, yeah, we're right in the...
We're in the heart of it all.
Yes, we are.
So, guys, I like to kick off all these podcasts with a little origin story. And maybe because I'm selfish and I just like to hear how people got started in the business. But if we can kind of kick it off with you guys' origin story, then we'll kind of get into the girth of our conversation today.
Sure.
So, Nate, I'll start with you. How did you get started in this crazy little world we call the automotive industry?
Kind of a long story. I was actually in the military. I was 35. I had gotten out of the military, but I was a contractor at that time. I was a survival instructor in the Air Force. And I was doing the job of a 21-year-old at 35, and my body kind of said, can't keep doing this. So like thousands of other veterans, I got into the car business, started in internet sales actually, and did that for about 6 months and was pretty successful, selling 25 cars a month, and they quickly promoted me to finance. and I had no idea what I was doing. I could sell warranties and gap and maintenance and all that kind of stuff.
Yeah.
But, I mean, I didn't know how to read a credit report or a bank book or how to talk to a lender. And so I always kind of felt like we were leaving money on the table. And I would just basically take whatever call the desk manager had given and use that guidance and ran the deals. But, I always kind of felt like there had to be a better way. And as I worked my way up my career and became a finance director and now I've got people asking me to get deals bought. And to be honest with you, I hadn't learned anything new. They send you to schools to learn how to sell service contracts and maintenance and gap and overcome objections and do menus and interviews. And there's just no school to teach you how to get a deal funded or how to get a deal bought or how to talk to a banker. And, so then I kind of reached out to some reps with Cuddle and things like that, just trying to see if there's any type of a guidance out there showing me, who uses Experian or Equifax or TransUnion or NADA versus Kelley Blue Book or, and there just wasn't anything out there. And I'm not a computer guy. Tried to, make an Excel spreadsheet type deal, and that didn't work very well. And, and like everybody else, I had an old 3-ring binder in the back of my office where got a bunch of bank sheets, and they update every month or 2 months or 6 months or once a year. You never know. And by the time you find a lender, you look at their rate sheet and it's 6 months old. So now you got to go dig up the new one, and it was just a giant nightmare. So I kind of came up with the idea of eDirector, which is basically a digital bank book, if you want to call it that. And we take all the lenders, and then it was a matter of figuring out how to make the idea work, and that's where Brett came in.
That's where Brett came in.
Yep.
Enter Brett. So, all right, Brett, how did you get started in this crazy world?
Well, so I've been in technology for 20 years and know everything there is to know about technology, but absolutely nothing about the automotive industry. And I bumped into this guy when I had temporarily moved to Whitefish, Montana. And, through the years, I've had tons of people always had the best ideas, right? Oh, hell, if you could just build this for me. Oh, if you could just build this. And, I've learned to ignore a lot of those because a lot of them are just, would have been a waste of time ultimately.
Sure.
But Nate, being the good sales guy he is, after about a year of me kind of ignoring him, it sounded like a great idea. I just knew nothing about the auto industry. So why on earth, it's not something I wanted to get into. So, but somehow it's like that black hole. It kind of sucks you in, right? So,
yes, it does.
Anyhow, we went ahead and decided to go ahead and build something after a few drinks and a few decisions. And next thing you know, we were off to the races. So that's how I stumbled into the auto industry. eDirector. So
And never look back, right?
And never looked back. Yeah.
That's you know what? That's how a lot of us get started, though. Mm-hmm. I find that either either we're born into the business,
Yep.
or we fall or stumble into the business, or maybe like me, you got conned into the business. But I love the fact, or the topic that you guys are, or the space that you guys are in, because it's a topic I don't normally get to jam too much about, right? So I'm kind of excited to kind of have this conversation, because to your point, Nate, like there isn't a whole lot of or training or just systems or technologies in general when it comes to helping the finance manager execute what they need to execute on a regular basis.
Right.
So let's start there, because I think with any good piece of technology, we have to define the process and then work backwards towards the technology itself.
Right.
So let's start with the process. What was the process that you guys kind of set out to solve or better?
Yeah. So basically, right now, depending on where you're at in the country and what systems you use, if you've got DealerTrack, usually you have either DealerTrack or Route One, and you may have Cuddle as well. Cuddle is going to be credit unions, where DealerTrack or Route One is going to be more on the bank side, but also a mixture of some credit unions as well.
Yep.
And so one of the big problems is, having to go back and forth between two different sites to figure out, what lender to use. And you typically, you get lazy and you learn 5 or 6 lenders, and, you meet the bank reps, and maybe they take you golf, or maybe they're attractive, or whatever reason you decide to send them a bunch of business, or maybe they get the best deal too. But in most cases, it was somebody that, is more of a relationship type buyer.
Yep.
And so what we do is we take literally every single lender that a dealership has access to, and we take those rate sheets, and through a proprietary system that we have, and it's all patent pending. But basically, in a nutshell, we take all of the lender information, we put it into our database, and then we pull the data from the CRM at the dealership.
Okay.
So there's not a lot of manual entries that's needed. And based on the structure of the deal and the creditworthiness of the customer with their credit report or their credit scores, where they live is important, their zip code, because a lot of lenders will only lend to certain areas, the structure of the deal, book values, and then the year of the vehicle. We basically decipher every rate sheet, and we give the information that's published on the rate sheet to the user, showing them who has the best rate and who has the best front-end advance, and how much you can sell a service contract for, or gap policy, or what the flats will be, if you can mark up the rate or not. And if you can mark the rate up, how much can you mark it up? And
so you compile all this kind of data into one place. Because I remember, when I worked the box, I had to do this all manually.
Yeah.
You brought up Excel sheets, earlier, and I actually got pretty proficient with Excel sheets. I remember when I went into the box, I could barely make an Excel sheet if my life depended on
right.
it. And the year and a half I spent there, I was a pro by the time I got out. So, that was a pretty daunting task. I would probably, because everything gets reset. Well, some banks would set monthly, some would reset quarterly. But just the time to take to create what you just spoke, it could take me 8 hours, at least a full day.
Oh, yeah.
If not 2, just to update my sheets so that I knew what everyone's rates were. And I could easily create that matrix, go down, figure out which banks I was actually going to submit to. Yeah. But I was one of the few F&I managers that did that. Most of them they had their main 2 or 3, right? And that was it. They just went to them. They didn't even think anything else about it. And they left so much money on the table.
Yep.
So, from a tech perspective, probably gone a lot farther than my old crappy Excel sheets. All right. How do you compile this data and put it into an easy place, an easy way for everyone to read it?
So the easiest way to say is we have a funnel, more or less. The funnel, we have a system that everything has to go into one format. Once it's in our system, and how we get it in there, is the proprietary piece. But now that it's in there, it's easy to search on, right? So now you can just put the deal structure in and say, okay, boom, show me the 20 lenders very easily, or however many lenders you have access to. Here are all of the ones you have access to. Here's the front end, advance, back end, and all the details, easily to sort, et cetera, et cetera. So, but yeah, that's kind of where the magic is it's kind of, to your point, it's an extremely fancy Excel spreadsheet that stays. We obviously take on the chore of keeping those up to date. 3 times a week, we're going through every single lender in the, for your dealership to make sure it's constantly up to date. So,
Now, I think a lot of things, I mean, obviously, look, a lot of things have changed in the last 24 months, right? But I think a lot has changed for the box.
For sure.
Look, sales changed, but mainly just because of circumstances in the environment, right? Like it was either wherever you were in the world, either you were in shutdown or lockdown, and then there was an inventory shortage. But the box changed a lot, right? In a lot of cases, we couldn't even do a turnover face to face. So much has changed. So I'd love to kind of get your guys' thoughts, each of you, of how the F&I department has changed in the last 24 months, and where do you see it going in the next 24 months?
That's a great question. I was actually in finance. I was still in the box when COVID started.
Mm-hmm.
One of the biggest things I saw is we went from 75 to 80% of our deals were finance deals at the dealership.
Mm-hmm.
And during COVID, that changed to maybe 60%.
Mm-hmm.
It wasn't that more people were paying with cash. It was that more of our deals were outside finance, where, the customers weren't coming into the dealership. They were all going through the internet sales department. We weren't getting an opportunity in the finance, and a lot of times to even present rates to the customer. They would show up with a check from a credit union. And in a lot of cases, it was a credit union that we could have even sent them to and got a 1.5% or 2.5% flat and had a chance to sell gap insurance and service contracts and all of that. And the reason I feel that we missed out on most of those is because we weren't very transparent on our website. And we were super aggressive as far as that's not the right word. We weren't aggressive on our interest rates. We were aggressive to make a lot of profit and showing, 4.9 or 3.9.
One rate across the whole board for everything.
Right. And, if you've got somebody with a 750 credit score, we ran a test on over 3,000 deals that have been ran through eDirector, and the average interest rate for a tier 1 is 2.44. Right? Is that what came back at? 2.44. Wow. And all that was required to reach that rate was a 725 credit score. That's the average credit score for a tier 1. And so when you figure, especially in the area we were in Montana, I would say a high majority of our customers were in that tier 1 tier. And if we're advertising 3.9 and they can go get 2.4, they're already online buying vehicles. They're, and I just feel like that's the next step that more and more people are doing, who are buying outside of the dealership and not wanting to come in and sign paperwork, is they have more time on their hands. They're working from home. And, I know that working from home versus working in an office, there's a little bit more freedom sometimes.
Well, there's more time, right? So I can do more research.
Exactly.
And what it sounds like you're saying is that we're not just researching the vehicle, but now we're researching the entire process and everything that gets involved in purchasing.
Yep.
I was talking to an insurance guy, and he was almost saying the exact same thing, right? Where the amount of time spent on an insurance site wasn't just a matter of, I just need it, let's get it done, but a lot of research was happening at the same time. Brent, what have you seen that has been a big change in the last 24 months?
Well, what I can say, just since I've only been in the auto industry now for what I would call a year and a half, but in that time and never worked in the box, but it is pretty blatantly obvious that the customers are driving change to everything, right? Where using technology used to be optional, right? You didn't have to use it to get a deal done. And now it's, with the new wave of things that are coming through COVID and everything else, is technology is a requirement now. So now trying to be, dealerships need to be open-minded, obviously, to, okay, we need to see all the new technologies that are coming out, and how can we maximize every deal that we're doing to, in turn, either shorten the time to close the deals or get more profit out of each deal. So I can't specifically answer how it's changed in the box per se, but I do know technology is absolutely that's not going away anytime soon. So,
well, no, then Brent, what I'll do is I'll start with you, and then Nate, I'll come back to you. Where do you see it going over the next, let's say 24, maybe even up to the next 36 months? I don't know.
I would have to say, God, I don't know that I can even answer that question, really. Honestly, it's where is it going? More and more technology is going to happen, but I feel like so many things are changing so fast right now with the dealerships and with inventory. And you have some manufacturers like Ford that are talking about they're not even wanting to keep inventory at all. It's build your car,
That's it.
So build ahead of time, and then we'll ship it to you. So I will honestly say that I think at some point the dealerships are going to be somewhat of a middleman may or may not, we're going to start losing ground over the next 10 years, I'd say.
But I mean, I think in general, I mean, you're 100% right that the big shift is going to be in more technology going back to process, right? The one thing that we got a big taste of, during the last 24 months was being able to do a lot with a little. And so when we think of these processes that were very, let's say, time intensive processes, for example, generating those Excel sheets and keeping them updated. That was an incredibly, time intensive, project. And I think that it's going to be kind of the future of the next 24 and 36 months. You're going to see more systems like this, especially in the F&I office, because, salespeople don't get it.
Right.
The amount of time it takes in a box to get a deal done, they think we're a bunch of paper jockeys, right? But it really, I think it's one of the few places in a dealership that really does still require, it's an art form. Like, you kind of just have to know, who's buying, what they're buying, how often they're buying, and how you're presenting the information. It's big. So Nate, I'll ask you now, how do you see us progressing, or the box progressing over the next 24, 36 months?
And to be honest with you, that was one of the I've had this idea for eDirector for 4 or 5 years, as I was making Excel spreadsheets and all these other things. And one of the reasons I really ramped it up was I feel like the writing's on the wall. I think that the finance office is going to be a thing of the past the way we see it now, where it's the guy behind the curtain and come back and we'll, finally disclose to you what your real interest rate's going to be, and all the smoke and mirrors that we still see today. And holding rate, I think that's going to come to an end, whether it's forced upon us by the administration or the dealerships themselves. More and more dealers are going away from paying, full commissions on reserve. They want more of their money put into products. With the remittance and everything, and the packs that they can put on all the products, and so it's more profitable for a dealer, obviously, to be selling products versus just holding rate, and especially non-cancelable products. So I feel like you're going to have to be more transparent. You're going to have to be more aggressive. You can sign somebody up, hold 2 points, and have a $2,500 reserve, and that sounds great when they leave your office.
Of course.
But 2 weeks later, when you get your chargeback report and you see that they went and refinanced at a credit union down the road that you could have sent them to, maybe made $300, $400 less on the deal, but you would have kept it all. And that's something I started to learn at the end of my time in the box was, running $2,500 or $3,000 a copy with 15% chargebacks isn't that great? Versus if you can run $2,200-$2,300 a copy, have 5% chargebacks, and really happy customers who felt like you got them a good interest rate, felt like they got a good deal, and so that was kind of I had a come to Jesus talk, with my GM, and I felt like I was running great numbers, way better than everybody else, but I didn't have a ton of happy customers that were always leaving my office. And so, so I kind of took a strategy change in my head, and it took a little while to do it. But, once we did, the numbers really didn't change, and we had happier customers buying more products, being protecting the dealership. And I just think that that's going to be the way things are going to have to be. And if not, then it's going to go more and more to the A to Z shop where the salesman literally goes from point A to point B. And I don't know that that's the best way either. But I can tell you that the dealerships that have done it, their customers have never been happier. There is the transparency. There's not the passing off from one person to the next. Exactly,
because you're looking at the transaction as a whole, not as a stepping stone, right? And I mean, look, if you think of some of the best experiences we've ever had, right? Either restaurants or hotels or just with people in general, it's the first and last impression that actually ultimately generates the entire experience.
Right.
And, how often we've seen this happen where the first impression of the dealership's wonderful. And then that last impression usually is in the box. It's usually where it always happens. And it just destroys. It just destroys everything. Right. And, I think a lot of dealerships have to balance out profitability and experience. But I think that person that has that mindset around being able to balance profitability and experience is an entirely different person. And I think, what that persona looks like, the person that works in the box, I think that has to change over the next 2 to 3 years. So let me ask you guys that question. Nate, I'll start with you, and then Brett, I'll come back to you and ask you. What do you see that person look like that should be working the box over the next few years?
I think it's going to be a hybrid. I don't think it's going to have to be somebody that's flexible and that's trainable or coachable to try new processes. Yeah, it's not going to be the 25-year-old vet who's been back there forever and has done it his way and isn't willing to change. But it's going to, I think it takes a special person too. It takes somebody who's smart and isn't just an order taker. So I think it'll be interesting to see. It's the plan is proven that it does work. And I think a lot of it boils down to CSI. Once again, when you, as you were talking about making sure the customers are happy. Typically, if you're going to have a CSI ding, it's going to be either on finance or paperwork process, or which is typically one and the same. And by having that transparency from the start, I just think it's going to be better for everybody, including the customer at the end. And typically, the happier the customer, the more they spend. And I just don't see a negative in going that route and being more transparent.
I'm totally with you. I think that person is going to be a lot more tech savvy than they ever have been in the past. Brett, I'd love to kind of get your thoughts. I know, and I think this is cool, Brett, because you haven't been in the automotive industry, right? But I know you bought a car before.
Right.
So you know what that box experience is like. Yep. What do you think that persona should be moving forward?
So what I do think what I can imagine, it's inevitable, is, to his point, the man behind a curtain is going to kind of have to go away, and the streamlining that whole financial process, right? Like right now, there's still, some of these lenders are still kind of, maybe they approve it, maybe they don't, shotgun it out to 5 lenders. Obviously our tool helps with that piece to keep from shotgunning it out to 5 lenders, but there's still the turnaround time from the time me as a customer walks into the dealership and I get to leave with my car. Even if I know exactly what I want, I know exactly what I'm willing to pay, et cetera, et cetera. There's still I don't know what it takes now, 4 hours or something like that, minimum 3 maybe. But I do see that changing, and that will come through more automation, I think. And I do think the lender process as well, from the guy in the box, is probably going to be, my hope would be doing a lot less as far as having to guess which work with the lenders. Is going to be more of a, automated approval somehow.
Yeah.
I don't know what that looks like exactly, but I'm certain it's going to be streamlined.
Well, I think that time's going to come back to them. So what they do with that time is going to be the make and break. Right now, if they take that newfound time and they really hone in their abilities to provide a great experience, I think that's going to be where that time should be spent. Now, unfortunately, though, I think that time brought back is just going to be spent in just selling additional product. I hope that's not the case. But we've seen that happen in the industry before, right? We'll go and create a process. We support it with technology. We save time. We bring that time back, and then what do we do with it? We find some other stupid thing to spend that time on.
Yeah.
So, guys, we're here at the IS20 conference. And I know it's only the first day, but I'd love to kind of hear your guys' takeaways. Like, what have you guys heard so far that was really like, yes, an aha moment? Brett, I'll start with you, and then Nate, I'll ask you the same question.
We've heard a lot of different speakers. This part we may almost have to cut out, because I'll be honest, as of yet, this is let's trim all this part out.
Sure. Here, we can bypass that altogether.
Yeah,
I'll go straight to the exit. Okay.
Like Nate, I don't know if you have anything valuable to add. I feel like,
honestly, guys, I was hunting for another question. That was it. So
I could speak on it. I think these type of things are not necessarily about who's speaking and who's doing the presentations, and because everybody who's doing a presentation for the most part has a hidden agenda of some sort.
Yes.
I'm doing a presentation on, increasing gross profit through lender management. Obviously, I want people to buy my product and I want people to use our product, but I do feel like there's lessons that we can teach, right? We can, For instance, we can use stats that I never would have known that the average credit score needed for a tier 1 is a 725. And by doing all the deals that we do, we can pull that data, right? So I think you have to read between the lines on where they're trying to steer you.
Sure.
Because most of the presentations are done by vendors. So, I think there's that. But, we've gone to a few of these different conventions now, and whether it's been this one or internet, or excuse me, finance F&I groups or digital dealer or whatever, it's more about the networking for me, about meeting new people and getting a chance to do this podcast. We never would have got to do this podcast, at least in this environment, if we weren't here.
That's true.
So you meet some new people, and then the next thing you know, you're invited to be on a Clubhouse interview, and people start hearing your name, and we signed up 5 dealerships from a Clubhouse that just kind of went off on a tangent and brought our name up, and then I got a text message from one of the guys that was there, and he said, "Hey, get on here," and I got on there, and we signed up 5 accounts. So never would have had those type of opportunities if it wasn't for going to these type of deals. And
I think events like this, you extract what you can out of it.
For sure.
Right? When I was a dealer principal, I did craft time or carve time out of my weekly schedule to learn from vendors and what their products were, right? And what they were selling, because I think even when someone's pitching me on just 100% sales pitch, all right, I'm still learning from what the product ultimately does. So I think there's value, but you just have to be able to extract it. Okay, guys, we've covered some really cool topics today, and I still think they're, especially around the F&I office, the box. Hey, I hate the fact, by the way.
Right.
All right, but I think we did cover some pretty cool topics, and there's still more to be said about that. For everybody out there that's watching and listening right now who would maybe like to continue, some of this conversation with you guys, what's the best way to connect with you both?
Facebook or LinkedIn. I'm pretty active on both of those. Our website, shameless plug, www.eDirectorllc.com. There's a video on there where you can go on and try out the product, see how it works, and then there's a contact button on there as well where they can send us a link, and we can reach out and contact them.
Perfect. Guys, I really appreciate you taking the time to jam with me today. This has been a lot of fun.
Thanks, man.
Absolutely. Thank you.